Hi, everyone, and welcome to Grab Your Keys. I am super excited, beyond excited, and so honored to have a friend of mine, a peer of mine, Barry Habib, on today. You are the president and or CEO of MBS Highway, founder of MBS Highway, crystal ball winner year after year after year. So many great things personally and professionally. So Barry, thank you so much for being with us today.
Sue, it's a pleasure to be with you, my good friend.
So I'm just going to jump right into it. And it's not anything that's on my list of questions. I usually say, how did you get into the business? Blah, blah, blah. But everyone knows you're the jack of all trades. But really, what is going on with the market right now?
So the key word is uncertainty.
Right.
There's rates wanted to come down, and we're heading down. If you think about where we were towards the beginning of April, rates were on a pretty darn good trajectory lower. We were at 480 on the 10-year, and we had gotten down. We actually broke underneath 4%, and all of the tariff stuff really put the markets into a state of disarray because the market hates uncertainty, and the stock market was wildly fluctuating down and up and down and big moves. The bond market also concerned about inflation based upon what the tariffs could do. But I think that the market is starting to understand that we have a few things that are very important here. Number one is that we know that while tariffs currently are uncertain, they are not the same as inflation. It's a one-time price reset, a price adjustment one time. So yeah, that's important. Important distinction. But they can also be deflationary. You think about the slowdown in the economy.
Right.
So the big one is China. Now, the other countries with the 10% tariff, look, unless you're importing everything in one shot, maybe if it's a vehicle, it could have an impact. But think about a T-shirt. That T-shirt, maybe the importer pays $10 to bring that over.
Right.
So that means if it's a 10% tariff, that's $1, right? So that T-shirt goes up $1. Then that importer sends it off to a wholesaler. So maybe they mark it up $3. So now that T-shirt used to cost them 10, cost them 11. Now it costs the wholesaler another $3 on top of that is 14.
Yeah.
So now they send it to a real retailer, and maybe it's another $3. So now it's like 16. And then the retailer doubles it. Maybe they put it on there for $29.99. And so you pay $30 as a consumer for the T-shirt, but maybe it was $28 before. So
Right.
not a big difference there with a 10% tariff. It's not what most people think. But China is a different story because it's not only the tariff is excessive. Once you get over 50%, it doesn't matter. But already like Shein and Temu, they said they're going to be raising their prices 50%. So that's a big increase. But the real pain, in my opinion,
Yes.
is we all know how painful it was to have supply chain shock like we did with COVID.
COVID. Yeah.
Well, once you reach a 50% level of tariff, the supply lines, it doesn't make sense to import anymore. So the reason we've been pretty calm here, I mean, we've heard tariffs, but we haven't yet really felt it, right? It's not been something that, okay, we're experiencing, but here's why. It takes about 45 to 60 days to feel that because that's when the supply of stuff from China to the US would normally hit. So those ships are coming over with empty containers now or nothing, skipped stops that are coming over. They call them blank stops. And I think that once you get past Mother's Day, it'll start with the West Coast. And then as you start to get into early June, the whole country will start to see stuff that would normally be on the shelves from China not be there unless there's a deal put together. And even if there is a deal put together, there's still going to be a hole there that will have to be filled, will have to be dealt with. So there will be supply shortages. That means there's going to be price spikes. Does that mean there's going to be hoarding? I don't know, but we have yet to feel that. But I think that the public pressure will start to mount at that point, and there'll be more pressure to put a deal together. I think China knows this. I think that the U.S. knows this. And, China feels the pinch of this too. I
Right.
mean, we buy so much stuff from them that economically they've got to be feeling it. Their businesses that normally ship to us definitely are feeling the pain from it too. So there's pressure there. So I think both sides may start to feel mounting pressure to come together to put a deal together. Now, as far as what it means for interest rates for us, look, inflation's heading lower aside from the tariffs. We know if you look at true inflation is a good leading indicator. That's about 1% below where the government data, which is lagging, is reporting. So, things can change, but there's a gravitational pull lower in inflation. That's an important factor. The labor market, we got a lot this week, but the job numbers have been showing less job openings, and we get the JOLTS numbers tomorrow. You do see people that are, once they're lost their jobs, they're staying on unemployment longer, the duration's longer. So a lot of signs pointing to that unemployment rate rising. GDP, we're going to get that this week too. And you get a minus sign in front of the GDP for first quarter. That's something that the Fed's going to have to pay attention to. And the Fed's been really, I don't know, a bit silly in being so backward looking. They admit that they're restricted. They admit the economy's slowing down. They admit that the tariffs could be detrimental. They're going to see a negative GDP number, likely.
Right.
What is the Fed waiting for to reduce rate? Why? Because they're not sure of what tariffs are going to do. Well, if you wait too long, either way, you're going to put the country into a recession.
Right.
So, these are all important things. So I think from a rate perspective, things appear to be favorable. And we've got a Treasury Secretary I
Right.
spoke to myself who wants to do less issuance of long-term debt. That puts a premium on him, so that should bring rates down. Doge will have less issuance. We started to see rates come down because of that reinvestment of the Fed's balance sheet, right?
Right.
That run up of the balance sheet. So we saw rates come down because of that, and then all heck broke.
Right.
So all those things were happening. So things are, in my opinion, a greater chance for an improvement in favorability. And also, what Scott Besson told me was once they do the bank deregulation deal, what that does is it makes it easier for banks to hold treasuries. So banks could hold more treasuries. That's another buyer. That sops up a lot of the supply. The more buyers you have, the more premium to the price. As price of treasuries go up, the yield comes down. So all of these things will benefit us.
Right.
Doge, look, I had the honor of speaking to Elon Musk myself. And when I spoke to him, he said, I said, how much do you think you could cut in expense? He says he still thinks $1 trillion. I don't know if they could do that. But what he did say that was important, he said, Barry, let's remember that it's an annuity. He says, whatever we cut, it's not like a one-time cut. It's that benefits every single year, that cut. So there are things that are being done that should help improve interest rates.
So besides what we were just talking about with the Federal Reserve and Doge and everything, what do you think about the risk levels of loan level price adjustments? I mean, we saw those hit years ago. We haven't seen any lightening up with those loan level price adjustments. Do you think Bill Pulte will change that at all with the loan level price adjustments based on risk, or you think they're here, that's just here to stay?
It's a difficult one to answer. I actually had dinner with Bill Pulte, and I think he's pretty sharp.
Mm-hmm.
Bill is not really giving any clues as to what that might look like, but I do talk to him, and I will continue to try and see what information I can gain.
Yeah, I
But
just think
I've
that
been unsuccessful so far in getting any insight there.
yeah, I just think that we put those loan level pricing adjustments in years ago, that really was to help the home buyer, so they said. But I really think at times, especially in rates going up, it really has impacted the home buyer more than anyone ever anticipated with regards to the rates going up. And now as rates come down, if we could have that easing a little bit, and re-looking at those loan level pricing adjustments, it might actually make rates be able to come down faster for some.
Look, it
That's
would
just
be
my opinion.
it would be a wonderful thing. It's kind of a zero sum game. It goes out of one
Mhm.
bucket and into another, right?
Right,
Right now, uh, the Fannie Mae and Freddie Mac have been cash cows
right,
for the government, right? So, um, what they give up in loan level price adjustments means that that comes out of the revenue bucket, right?
right,
So, I don't know what the appetite is for that, but
right.
um, it certainly would help if those were lightened up. I agree.
Right. So in your big picture of you've been in loan originating, you're coaching many people, your cost of waiting analysis, MBS Highway, which we use every single day and I absolutely love. And I think it's like a tool that no originator can live without. What do you feel the three keys to success are for those originators right now who are listening to us and are like, I just have to get to that next level? What do you feel the three keys to success are for loan officers or business in general?
Well, so I can give it to you in one, and
Yeah.
I think it's the most important one, is that the fastest way that you're going to increase your income is to simply close more of the opportunities that you already have. And just think about that. Think about how beautiful that is. You don't have to spend money. You don't have to do anything different. You just have to be more effective, right? So how do we
More
do that,
conversion.
right? More conversion. I mean, that's the key. That's everything. So you are going to be more effective in converting if you gain trust. Now, there's a few different ways to gain trust. It's a whole different topic to talk about how vulnerability will gain trust. And this applies to everything. Family, friends, business, your love life. Think about how magical things are in a relationship where you trust each other, and think about how everybody can either relate or knows to a relationship where the two people don't trust each other. How toxic those are, right?
Right.
We've seen that. We've lived through it. It's awful. So trust is magic if it's there, and it's the same with your customer. So another way you can gain it is with your wisdom. There's a big difference between information and wisdom. People don't expect to pay for information. If I Google something, I'm not expecting to pay for it, right? But wisdom, that's something that I feel like I'm probably going to pay for. The mortgage originator that is going to be most successful has to make the distinction: what business am I in? Am I in the business of being a information regurgitator, or am I going to speak from wisdom? Now, Sue, if you were to get, it'd be kind of cheating, but if you were to get the questions in advance to a test,
Right.
the chances are you would score pretty good on that because you know what the questions are and you know what to study for, right? So
Exactly.
there's a good chance you'd score pretty high. But yet it's not cheating; it's just good business. And to think about what questions your customer is going to ask you. You already know what they are, but
Right.
yet so many mortgage professionals, Sue, they're not taking advantage of that incredible opportunity. The customer is going to ask you a question, these questions. So, Sue, tell me, is this a good time to buy? I'm hearing all this negative stuff. I don't know, this tariff stuff. They're talking about a recession. Realtor.com's article just said home values, really crashed during recessions. Diana Olick says there's a housing bubble. Uh, I don't know, am I making a mistake here to purchase a home right now?
Mhm.
And where do you think rates are headed? Now, here's how most people in the mortgage industry answer that. Well, I'll tell you, it's seems like to me real estate market's pretty good right now. So I think it's okay. And rates, oh boy, if I knew where rates were headed, I'd be having a pina colada on the beach somewhere. Ha. And that's how most of your competitors are answering that. How are you answering that question if you're in the mortgage industry today? Think about it, because here's how I think you should be answering it. So please pay close attention. Mr. and Mrs. Client, that's an excellent question. This, after all, could be one of the largest financial transactions you make. It's very important. So look, real estate, like anything else, it's going to be based upon supply and demand. And you know what? In real estate, supply has increased. But while people make a big deal of it, that's from historically low levels. If we look at more normal times, pre-pandemic, we're still about 25% short on inventory. So inventory is still tight. At the same time, population's increased. So inventory remains tight. And the good thing about working with me or somebody like you, Sue, is that we have good visibility into local market inventory. We use tools. We have great realtor contacts. We know what the market is. And I can tell you right now, inventory is pretty tight, relatively speaking, in this marketplace. So that's a good thing. Going forward, if you think about it, it's also supply and demand. We are forming 1.8 million households per year. That's how many we've been averaging over the last 5 years and what it looks like going forward. So that means builders need to build about 1.8 million households to keep equilibrium. But you know what? They're only building 1.5 million, and it looks like that number is decreasing based on the data we see. And you can't turn that ship around quickly. So that's going to support home values. You know, while a lot of people make a big to-do about the recession, the fact of the matter is over the last 50 years, we've seen 7 recessions. 6 of them, home values have gone up. The only
Right.
time they've gone down is because those loans were part of the housing bubble, where you were putting, fog up a mirror, you can get approved. No income, no asset, no job, no down payment, 580 credit score. These were loans that were done so everybody who shouldn't have gotten a mortgage did. It brought too many buyers in. Home values went up way too much. And when that stopped, then the music stopped, and we saw that values had to normalize themselves. That doesn't happen anymore. And that's why during recessions, home values go up, because interest rates come down.
Yeah.
In fact, Sue, do you know that in the past 83 years, home values have gone up 77 out of 83 years, 77 out of 83 years. 5 of those were together during the housing bubble that they came down. 5 of the 6 years that prices dropped. So aside from that 5-year housing bubble, it was only one time and it went down less than 1%. So I think it's a fool's game to bet against real estate. So I think you're pretty good there. Now, as far as interest rates go, well, this will be a big week. There's a lot to chew on. We're going to see job openings. We're going to also see what the job report comes out at. And if the unemployment numbers continue to rise, that's good news for interest rates. We know inflation looks like it's coming down. That's good news for interest rates. We know our Treasury Secretary wants to lower interest rates because they want to issue less 10-year debt. They want to reduce the spread between the 10-year Treasury and mortgage rates by doing bank deregulation. All of these things bode well for interest rates. And I think even more importantly is the labor market itself. The GDP
Right.
is something that the Fed's going to be looking at. And we get that number this week. What if it has a minus sign? The Fed's going to have to become less restrictive. So to answer your question, I think that the outlook for interest rates is favorable. I think that home values are very well supported. Now,
Right.
that might have taken 90 seconds, 2 minutes, Sue, but who do you think has the better chance of gaining trust and closing that customer and making more income? So
And I'm just going to do a little plug for MBS Highway, because all of this information is on MBS Highway. So providing wisdom that gains trust through education is totally the key of making more opportunities convert.
that's exactly what it is. When you convert more opportunities that you have, you just make more money. It's that simple. It's just being more effective. That's what you have to do. And the other thing is too, Sue, is that so many mortgage professionals could have a much fatter bank account if they acted when rates dropped. We saw it briefly in August, briefly in September, and just earlier this month, or for a little bit in March too. Rates declined, but because it was such a short window, so many mortgage professionals were left in lurch, because what did they do? They saw rates come down and they're like, okay, who do I call? And then by the time they called and their customer wasn't expecting the call,
Already done.
like, okay, well, I'll think about it, or well, and then you start working up numbers. No, in advance of that, what you need to do is establish what's called a strike rate. And as you know, Sue, we have all that data already in MBS Highway. You don't have to do anything. We have every loan, what the loan amount is, the closing date, the loan type, what the interest rate is on it. And then there's a strike rate that you can have. You can have a global strike rate, what it is based upon loan amount, how much of a savings you need, or you could change it by individual. but you establish a strike rate with your customer where you say, okay, if you're going to save $300 a month, think about that. That's $3,600 a year. That's a free $18,000 in 5 years, Mr. and Mrs. Customer. Most loan originators, their job stops at the time of closing when they say congratulations on your closing. With us, it starts because from every day forward, from the day of closing, we want to fight for the lowest interest rate for you. So if you're telling me that we want to get a strike rate that corresponds to saving you $200 a month, $300 a month, let's establish that. And then when it hits that, because I'm going to monitor it every day, you'll get an alert from us at MBS Highway that your client hit the strike rate. You don't have to do anything. You get an email. And then once they do, I want to have your permission to go ahead and lock you in and go ahead and get that application started. Because as I'll show you here on the chart, this lasted a day. This lasted 3 days. This lasted a week. I don't want
an hour. If it was a couple of Fridays, it would have lasted an hour. And you had to strike.
I don't want you to miss out on all this free money. So that's what I'd like to do. It actually winds up selling you on the initial transaction better, right? And then it guarantees you that you will continue to get those opportunities, because that's what you should be doing. If you just do that, you're making hundreds of thousands of dollars more based upon that one strategy alone.
So Barry, with all that was just, if everyone's not listening intently and writing a ton of notes, they really need to. But where do you see the mortgage industry, especially with AI and where we live today, all the mergers, the Rocket, Redfin, all that other stuff, Zillow, where do you see the mortgage market evolving?
Well, it's always going to be a very important position for those in the mortgage industry who are offering advice. Those who are regurgitating wisdom are more vulnerable. So, this is an important time. AI is growing very, very quickly, very rapidly. We knew that it was only a matter of time before automation would begin to infringe. But I think that if you are able to continuously provide the wisdom, like the things that we just talked about, those types of discussions, they're vital, they're critical. Those are the types of things that AI, at least right now, isn't doing.
They're not going to feel it. And I know if we got into the mortgage business in the 70s or the 80s or the 90s or the 2000s, we all saw it go from handwritten applications to, to taking an app on a computer, to having a computer, taking an app on a computer. There's been lots of evolution. And I think that the people who are not gaining wisdom in AI are going to be the originators that are just not going to see the next decade of originating.
Well, we hope
using it.
Yeah, we want people to do well and we want people to thrive, but it's a decision that they have to make. How bad do you want it?
Right.
Just how bad do you want it? What are you doing to market yourself? Are you doing things that get you out there? Are you doing things like American Dream TV? So you can be on, you could get clips, you could be on CNBC with those clips, you could put them on your social media. You can, as in the book, The Art of War by Sun Tzu says, you win the battle before it's fought. Because before even speaking to the customer, you send them an email with your latest clip from CNBC. And they're like, oh, wow, this is somebody I really need to pay attention to. These are the little things that you need to be doing right now.
Absolutely. What piece of advice do you use all the time?
Well, boy, in general, it's you should really trust your gut, because your gut's usually right. But also to take the first steps. It can be overwhelming to do something that's new. It can be overwhelming. If you heard me give that explanation and somebody rolls their eyes and says, "Oh, Barry, that's easy for you to say. I can't do that." I mean, please don't have that defeatist attitude. It isn't like when I was born, the doctor tapped me on the butt and I started talking about what the next Fed move should be. These are all learned skills.
And I think what people don't realize a lot with you, and I've learned it from you, is that you are very practiced. You
Yes.
practice what you preach, and you
Sure.
practice and you practice and you practice, and you shouldn't be practicing on your client. You need to be practicing all the time.
Sue, that's such a great point. That's brilliant. Yeah, a professional boxer trains 1,000 minutes for every minute in the ring. You think about how teams train in sports. You think about how a theater, how much rehearsal do they do to get it right before they're in front of an audience? Well, you're on stage when you're either on the phone or in front of a customer. And are you winging it, or are you scripted? Are you rehearsed? Are you ready for that moment because you've done all the work beforehand? This is what separates you, and that's all part of being more effective in this journey.
Mhm.
We want to close more opportunities. We want to be more effective, so that requires the time. So yeah, watch the daily updates, and you will be able to gain this knowledge, this information. Look, maybe it doesn't happen in a week or 3 weeks, but over a couple of months, if you start watching the daily updates, uh, you will then start to speak differently. And over time, you will see that it's different. Look, Sue, my situation with cancer, I was diagnosed 14 months ago, and listen, I was completely ignorant. I had no understanding or idea, and they're throwing out these words and this medicines, and they're all foreign words and this and that, like, and it's a little overwhelming. But I decided to take it in bite-sized pieces, to write everything down and to take it step by step and spend the time and hours. And now, Sue, I will tell you the God's honest truth. Every time I speak to a physician, if I speak to a physician's assistant, a nurse practitioner, when I speak to them, every single one of them ask me, "Are you a doctor?" "Oh, so you're a doctor," they'll say. "No, I'm just very well educated," is what my response is. And that's what you have to be. You have to be very well educated. And this is just simply a decision. So don't say, "I can't learn some stuff about the economy." Don't say that. Okay. Just, it's a decision. How bad do you want to win? How bad do you want to be successful? And how bad do you want to have a future in this industry that's not only rewarding for you, but that literally changes the lives of your customers because you're giving them better advice? Is
Right.
that the type of business you want to have?
Yeah, that is, and it's actually the best business because it continues to give. It gives and gives and gives. And I totally agree with you. You've learned a lot over the last 18 months. I've learned from you, and I've watched you through this process, and I have the highest and most respect for you and everything that you're going through. But if you could mentor your younger self, what do you think you would even say to that younger self of yours? What advice would you share?
Boy, I'd need a lot of time.
Yeah.
um, Again, Sue, I think more of trusting your gut and just
Yeah, just trust
um,
gut.
put a lot of emphasis in taking the time to gain education, gain the advantage through education, and seek mentorship. Copy the winners. Just copy those who are winning. If you were to do that, if you could take shortcuts by saving the mistakes, by learning from those who are proven winners, those will help you on a faster track towards reaching higher levels.
Yeah, so I just thank you for the entire industry, for all that you have done, and the person that you are. You are a constant giver. I know that you pick up your phone whenever you possibly can. You answer texts, you answer Facebook messages. So that is so amazing. And really, I have watched you for decades be the person that you are. And I am so thankful that you are on Grab Your Keys, and just know that we're all here for you with your treatment and with you getting healthy. And I know you're really working hard at it. So thank you for always being there for us at MBS Highway. We know how to find you. We're going to put all Barry and MBS Highway's information on, if you want the demographics, if you want to learn the scripts. The PowerPoints are there, everybody. They're really at your fingertips with MBS Highway, and it's just an amazing subscription.
Well, Sue, you're absolutely everything that's good about this industry. You've been a dear friend for so long. You're a joy to be around. You just ooze happiness. You are also such a giver. I'm a big fan of yours, and I
Huge fan.
appreciate everything you do. Lots of love to you. God bless you, Sue.
Lots of love. Thank you, Barry.